All right, welcome back here to Trader Minute. Great to have you aboard. Let's go take a look here at some weeklies and what kind of is going on here with some of the weeklies in regards to the options, the risk reward scenarios, and whatnot. Okay, when you're dealing with weekly options. Okay. When you're dealing with weekly options, essentially what you're dealing with is you're dealing with something where you don't have as much time on your side. Okay. So in general, you're dealing with something where your delta is going to be higher. Okay. And let me, instead of going here to a option chain. Let me back out here. Let me go to cboe.com. Okay, and I'm just going to come up here to the tools and down to options calculator. Okay, options calculator. And we'll be able to kind of see what's happening here. Let's take IWM. IWM is the small cap ETF. Okay, the small cap ETF. They have weekly options. Okay, in general, the pros to weekly options are that they can hit home runs. You can have a 500 to 1,000% gain in a matter of a day, or even less. Okay, that's the pro. The pro to weekly options is that if you hit them right, you can have a huge upside. The con is that they can go to zero very, very quickly and you have no time to recover. You're either right then and there, or you're wrong. They're not nearly as forgiving. Okay. Now, there are weekly options. So here on IWM, we have weekly options that will expire this today. Okay. That will go out. They will expire today on December 27th. Okay. These options, let me go look at the current IWM price. Let me grab that current price here. 115. So IWM is at 115. Okay, 115.03 is its current price. Okay, these options, let's say at the 115 strike, okay, are theoretically worth 3 cents. Okay, they're theoretically worth 3 cents. The calls, the puts are worthless. Why? Because it expires today. 115 is the stock price, 115 is the strike price. Okay. Well, let's look at what's happening in reality. Okay. Let's look at these options that expire today. The 115s, the calls are going for 18 cents and the puts are going for about 16 cents. What does that mean? Okay, why is that different from our calculator? Well, our calculator is pricing in as if it's closed. Okay, but there are still, 4 hours left in the trading day? If we go buy these December 115 call options for 19 cents, we have 4 hours for them to run. Okay, 4 hours. If the IWM goes above 115.20, so we just take our 115 plus our price here, okay, 115.20, we're at break even. Anything above 115.20, we're in the money, and these things are going to appreciate very quickly. IWM goes to 115.40, we're going to get a double because these options are going to be worth 40 cents. IWM goes to 116, these options are going to be worth $1. So we will have a 500% gain in one day. Is it realistic to expect that? Can we have that happen with the IWM? Well, let's just take a look at the chart. Can IWM go to 116? Well, sure. On any given day, even from an hourly perspective, you see how much this can move. A 20-cent move isn't really that big of a deal. Okay, it really isn't that big of a deal overall. Okay. So the advantage of these weekly options is that you could just hit a home run very quickly because you're not having to pay a big time premium. Okay, where if you come out, let's go out to June, these same 115 options are worth $5. So you're having to pay a lot of a time premium that isn't there on the weeklies. Now, this is weeklies. These are weeklies that expire today. You can go do weeklies that expire in a week. Look, the January 115s that expire next week are 75 cents. You can go out and do the 115s that expire the second week of January, the fourth week of January. Okay, these fourth week of January, you actually have more time than the regular monthlies. Okay, so a lot of times people will think, oh, it's a weekly, I can't do that. Well, the weeklies that are talked about as being ultra risky are the ones that expire that week in which you're trading. If you're going out trading IWM and you choose the January 4 weeklies that expire on the last Friday of January, or excuse me, the fourth Friday of January, there's 5 Fridays this January, but the fourth Friday of January, you're not taking on as much risk as you are by dealing with the current weeklies that expire here today. Okay, so overall with weeklies, that the appeal is being able to get the high delta or being able to get your option to really move very, very quickly. The disadvantage is, heck, if IWM just stays flat, even if IWM goes up 10 cents here into the close, you're going to lose money on your option. The time decay will come in so fast. Okay, so for day traders generally using the weeklies, okay, using the weeklies is a nice thing to do because you're not really worried about the time decay. Okay, but if you're more of a swing trader, you're looking to hold it several days, several weeks, you generally want to get out into the monthlies or deal with a weekly that's going to expire in 4 or 5 weeks instead of 4 or 5 days. Okay. Risk reward. Okay, and RD, maybe you can help me if you put it in a chat. Just kind of how are you looking to use the weeklies? Okay, are you looking to use them from a day trade standpoint? Are you looking to use them from a swing trading standpoint? Okay, but let's take something here like let's take here something let's go with let's just I'm trying to think of the best one here. Let's go with um, now let's go Twitter. Twitter, everybody, it's a big play out there. Lots of action going on. I've mentioned my stance here on Twitter. I think Twitter below 70 can really get down to about 65. Let's come into the 1 minute chart here on Twitter. Okay. And let's say we want to day trade it. And we see Twitter, it's pulled back from 70 down to 67 and a half. It only took it, 45 minutes to do that. It's had a slight rebound. Let's just say for kicks and giggles, and I'm not going to do this live, but let's just say for kicks and giggles, we want to short Twitter. Okay. Well, the risk reward, if we're going to use weekly options, is very similar to using regular options. It's just your time frame and your option choice has changed, and that's it. So with Twitter, let's just say, you know what, 68.25, okay, 68.25, we want out. If Twitter goes against us, we want out at 68.25. Let's go price these puts. Okay, Twitter here, the puts here on Twitter. The December 67 and a halves are going for 70 to 80 cents here. Okay. What are they going to be if Twitter goes 50 cents against us? What are they going to be if it goes $1 against us? Okay. Well, we can do some rough math. Okay. Twitter goes $1 against us. Our 80-cent put option is going to be worth about 40 cents. All we have to do is slide down $1 on the strike scale. So we basically lose half of our value. Okay. Now I'm going to overestimate that a little. I'm going to say we're going to lose about 60% because overall here we're going to have time decay to contend with. If it takes an hour for us to get stopped out, the overall value of these options is going to go down. Okay. If Twitter goes our way by $1, okay, what's it going to be worth? Well, we bought the 67.5, and now let's say Twitter's at 68.5, 68.70. It'll be worth about $1.20. We'll have about 100% gain. Okay, so we can kind of do the same calculation as we would for a regular monthly. We can go use the option calculator if we'd like. We can eyeball it by just looking at what the overall prices are, but we have to overestimate that a little bit because the risk is going to be a little bit higher than what it will look like simply because of some of the time decay and erosion that can kind of come in here. Okay. That said, I mean, look, if you come over here and you buy a Twitter call, let's say you buy the 67.5 Twitter call, and Twitter decides to rally $3, which, it's had a $3 rally every day. If it decides to rally $3, you have a 300% gain on your option. Just look at this call option. I'm going to just chart the value of this call option. Look at how much this call option has changed in value simply today. It was at 360 at one point. Now it's at 90 cents. $7 yesterday, now at 90 cents. You're not going to get that type of percentage move from a regular monthly option, but you will get it from a weekly option. Okay, look at these puts. Let's just go and chart the 70 puts here on Twitter. Okay, the weekly 70 puts. These things were worth $1.20 here this morning. Now they've doubled. 240. They've had about 100% gain on them. Twitter starts to go down another buck, they're going to have another 100% gain on them. Okay, so they're going to appreciate much quicker, much faster. But at the same time, if you go buy these puts and Twitter rallies a couple bucks, this $2 put's going to go worthless very, very quickly. Okay, so the appeal is the delta, the heavy movement that can happen with it, and the disadvantage is you don't want to be holding these. You don't want to be left holding the bag on these. That can be very dangerous there. Okay. Hopefully, I answered your question there, RD. Let me know. As far as that's concerned, there. Let me know. Let's take a look here. Anyone have any thoughts? Is the volatility on Solar City due to the volume or just this stock? Yeah, both. As John said, it's much more volatile. Solar City here has just been it's been one that even the market makers have had a little bit of a difficulty being able to price accurately because of the way that it's moved and some of the different or some of the magnitudes of the extreme moves that it makes there. Okay. How did I put the charts on the? Okay, yeah, how did I chart the options? I just came over here to the bid and the ask. You see how it has a C and an A or an N and an I or an X. It can have these different letters. Just click on one of those letters, right click on them, and then it'll bring up a menu here. Just come down to TOS charts and click on the first square, and it'll take that option symbol and put that up into the top and chart that option. Okay, and chart that option. Okay. Triple D parabolic. Triple D here has been pretty intense the last several days, right? I mean, Triple D here, you get the pullback, you get a jump up, a pullback. Overall, though, the lows continue to get higher, the highs continue to get higher. The trend trends remain very, very, very strong. Okay. Good deal, Jimmy. Good deal. All righty. Well, thanks for hopping on. Baidu. Question here on Baidu. Look, Baidu here. Very, very strong move on Baidu. Very nice move here on Baidu, and volumes coming in. We don't have volumes in very much out there, but volumes there are a lot of volumes overall, and that bodes very well here for Baidu. Baidu continues to be in a very bullish trend. Where do you put a stop on Baidu? You could use today's low. That's always the struggle with Baidu is where do you put a stop because it can be so volatile. But Baidu in a very nice position. Even with that said, Kihu continues to hold above 80, which is very strong here for Kihu. Sohu after selling yesterday, getting a bid. Sina with a trend rider bull signal here, up about 4%. And bodes very well for the entire group. Okay. All right. Well, before I hop off, let's go take a look at our positions real quick. Here's Boeing down about $1.20, not quite a full percent. Uh, erasing a good portion of yesterday's gains. Not down as much as it was up yesterday. Bearish engulfing, right? From a technical standpoint, a bearish engulfing, opened above yesterday's high and is now trading below yesterday's low. So on a technical basis, it is a bearish engulfing, and yes, I'd be concerned about that if it closes in this 137 area. At the same time, we still have our higher lows coming in play. I want to give this to the close. If it's able to rally even a little bit into the close, it's still in a very nice position overall. So this will be kind of an end of day type decision. Nucor up about 64 cents here, up about a percent and a half or 1.2%. We are looking for 55 to 57 on Nucor, so this is just a continuation of the rally. And then Chesapeake, down about 14 cents, has kind of been a little up, a little down all over here today, but nothing really to react to. Okay. All right. Well, thanks for hopping on. Thanks, Jill. Yeah, this recording will be up and it'll be posted here shortly for you as well. For those of you that have a little bit of an issue there. So, thanks for hopping on, and John will be with you on chat. You have any questions for me? Please, Jeff at Trader Minute. Happy to help you out, and we'll talk to you later. Take care.